Hey guys, it's Sasha. So last night news broke that Elon Musk has made a bid of $97.4 billion to buy OpenAI. And there is a lot more to why Elon Musk made this bid than you might think. You will need a big bag of popcorn for this one. Trust me, it's worth it. So last night news broke that Elon Musk has made a huge bid for OpenAI. Musk's attorney Mark Toberoff said it's time for OpenAI to return to the open source safety-focused force for good it once was, as he formally submitted the bid. And Sam Altman immediately replied on Twitter, of all places, saying, "No thank you, but we will buy Twitter for $9.74 billion if you want." The implication there is that according to Sam, Elon's bid of $97.4 billion is way too low because Sam is offering Elon back a tenth of that, so that it's obviously related, $9.74 billion for a company that Elon bought for $43 billion. Now, the $97.4 billion bid is more than twice as much as what Elon paid for Twitter. When Elon Musk was buying Twitter in 2022, he had to sell Tesla stock to do it. Quite a lot of Tesla stock, and the whole saga started out in April 2022. Elon Musk eventually bought Twitter in October and then had to sell even more stock afterwards in November and December to finance the deal. During this time, Tesla stock fell 69% to a low of just above $100 per share. The overall market was negative in 2022, with the S&P 500 losing 14% in the same time period. But the drop in 2022 was the biggest in Tesla's history. So Tesla shareholders are probably watching this breaking news right now about OpenAI with some concern. And the truth is, Elon Musk's bid for OpenAI was probably never intended to be taken seriously. I'll explain why. It was a hostile bid, and Elon did get a number of financing partners on board to go in on the deal with him, I think to make it look more legit, right? Including Valor Equity Partners, Baron Capital, Altraders Management, Vi Capital, and 8VC. That last one is a venture capital firm ran by Joe Lonsdale, who was a Palantir co-founder. But the acquisition of Twitter also had a whole host of other investors, and Elon Musk still needed to sell a lot of Tesla stock to make it happen. This time around, the acquisition is a heck of a lot bigger. At a Senate hearing in May 2023, Sam Altman said that he is working at OpenAI for free because he loves it.
You make a lot of money, do you?
No. I paid enough for health insurance. I have no equity in OpenAI.
Really?
Yeah.
That's interesting. You need a lawyer.
I need a what?
You need a lawyer or an agent.
I'm doing this because I love it.
And I don't think anybody is buying that. You know what you could buy? Stocks on eToro, who are the sponsors of today's video. eToro is one of the world's most popular investing apps. You can try out eToro by opening a free demo account to test the platform and see how it works. And then if you like it, you can deposit just £50 or $50 to get started, because you can buy fractional shares on eToro. So you can invest as much or as little as you want. For UK investors, you can buy UK stocks and ETFs with zero transaction fees. So if you want to invest in the S&P 500 ETF, you can do that with no commission and no foreign exchange fees. If you want to buy US stocks, you can convert your money to dollars for a low fee of just 0.75% and then buy and sell stocks valued in dollars with no extra charges. Many users love eToro's design. Maybe you will too. Go and check out eToro and see what you think. The link is in the description and in the pinned comment. So Sam Altman said that he is working at OpenAI for free because he loves it. But since that hearing, OpenAI has hired an army of lawyers to change its status from being a non-profit to becoming a for-profit company. The legal structure of OpenAI is that the non-profit owns the for-profit entity. The non-profit is this one at the top of the chart on OpenAI's website, and the for-profit bit is the one at the bottom. Note that the investors in the for-profit company come lower down than the non-profit. And OpenAI is now trying to get the for-profit bit to buy out the non-profit bit. In October 2024, OpenAI did a funding round where they collected $6.6 billion at a valuation of $157 billion. And there are rumors that they're about to do another funding round which would value the company at $340 billion. So the non-profit owns this thing that is apparently valued at $340 billion. But there have been rumors that the lawyers that Sam Altman hired were trying to work out a deal where the for-profit would buy out its non-profit owner for just $40 billion. And right, the two numbers don't really make sense. The reason they want to do that is that then Sam Altman and the rest of the investors will make a whole load of money overnight out of absolutely nothing. And the reason that Elon Musk is pissed off is because he set up the non-profit in the first place. And he then gave the non-profit the first investment money, the seed money, to get it started. And then companies like Nvidia, with connections from Musk, donated hardware to the non-profit because it was a good charity. So you can see why Elon might be pretty pissed off that Sam Altman is now essentially just trying to steal all of that value and give himself many billion dollars worth of stock in the new company. So I think we all know that the bid from Elon Musk was never meant to actually try to buy OpenAI. It was much lower than the last funding round valuation and the current valuation. The real reason for the bid was to stop Sam Altman from acquiring the company for just $40 billion. Because OpenAI has had so many big investors over time, they might be a bit annoyed if an almost $100 billion offer from Elon Musk is ignored by Sam, and then Sam would go and award the entire thing to himself for just $40 billion. So it seems like this is the play, but wait, this chess position is actually a bit more complicated than that. When Elon was trying to buy Twitter, they also first said no, right? You know, somebody comes, tries to do a hostile takeover, you try to battle it back, but then they thought about it and ended up suing him to buy Twitter. The situation here is not quite the same because OpenAI is not a public company. You don't have the same rules around disclosure, around what you have or don't have to do, and the level of fiduciary duty expected from the directors is not quite the same because the company is private and only owned by a small number of shareholders. But imagine if behind the bravado and despite tweeting no thanks, Sam Altman actually has to take the offer and go and present it to the other shareholders, at least as a courtesy. And imagine that in the meantime, something happens. I don't know, the stock market starts tanking, for example, because of the very high valuations. Maybe tech company valuations tumble, and then suddenly Elon's offer for OpenAI goes from not very good to being pretty good. That's actually exactly what happened with Twitter. Elon Musk was trying to pull out of the deal as it became very overvalued before the court forced him to go through with buying Twitter for an inflated price. Or maybe we get an even bigger DeepSeek style moment, right? Some other company comes out with a much better LLM, some other new tech that destroys OpenAI's valuation. Given how quickly things are developing, that could also happen. Well, the implications could be pretty drastic, because if OpenAI choose to ignore the offer but are in time to respond and then force Elon to cough up $97 billion, it will be interesting to see exactly how much of the money the other investors have actually put up, hint, I don't think it's very much, and how big the gap is that Elon Musk will then have to fill by selling Tesla stock. This is probably not a very likely scenario, but given what happened last time, and this exact scenario sort of played out last time, you know, it could happen and the impact would be pretty big. But then let's think a few moves further ahead, because remember, only a couple of weeks ago, Sam Altman was announcing the launch of Stargate, a new AI company that is apparently going to invest $500 billion over the next 4 years building AI. SoftBank and Oracle are putting up huge chunks of money, but as it stands, the amount pledged, the amount that's concretely in there, is very much short of the $500 billion. And I would hazard a guess that even the pledges that we have heard so far are probably not so set in stone, and many of them, like the Microsoft one, are not even direct pledges. They're saying they're going to invest money into their infrastructure, into AI, but not specifically the entire $80 billion into this new enterprise. So imagine if Sam Altman has a think of longer than a few minutes, as he did last night, and then decides, you know what? We're cooking up some really cool big stuff that is a lot better than the stuff that is already out. We haven't released it yet, right? But what if I take the $100 billion from Elon, then give him the non-profit, he can keep the OpenAI and all of that, and then move on over to Stargate with my $100 billion, take all the top engineers, etc. with me, take all the IP. Remember when the Stargate project was announced and Elon Musk tweeted they don't actually have the money? Well, they could actually have the money if they do a U-turn and take that $100 billion worth of money from Elon. That could certainly be pretty entertaining. It would require big balls of steel and a very big bag of popcorn. But what if after this whole Twitter spat, Elon actually gets annoyed and then ups the bid further, right? Elon is not used to being told no thanks. We've already seen what happens last time with Twitter, and we have seen in the past that he can at times make an impulsive buying decision without necessarily thinking it all the way through. Back in 2018, Elon Musk famously tweeted that he had funding secured to take Tesla private at $420 a share, and after tweeting that, it seemed that maybe the funding was not all that secured, and the SEC were not very happy with Elon when he tried to tell them that it was a joke. So imagine Elon has another one of those moments and comes in with a, I don't know, $250 billion bid. And then the investors sit up and see that they could get a guaranteed huge gain on their initial investment today. They could get paid with all the profit right now versus waiting for a potential payday at some point in the future with all the associated uncertainty and risk. And as far as Sam Altman is concerned, he will also then get to watch Tesla stock burn hard if Elon actually has to finance any significant chunk of the deal by selling Tesla shares. And this could actually happen. I don't know how likely it is, but it could. Elon has been suing OpenAI recently, trying to stop them from turning into a for-profit. And if those lawsuits, as many people say, do not go anywhere, he could just try the sledgehammer approach by offering money that OpenAI would not be able to refuse. I know Elon has a lot of friends with a lot of wealth, but he had the same friends back in 2022, and he still had to sell millions upon millions of Tesla shares to make the deal happen. And remember that OpenAI is still losing a lot of money right now. So on top of the purchase price, however many billions it is, he would then also need to get even more cash to finance the running and ongoing losses of the business. Now, I don't know if any of these scenarios might play out or if something even more wild or drastic could happen. And it could be just that Elon Musk is trolling Sam Altman. And he's trying to stop him from buying out the non-profit on the cheap. But given how Twitter acquisition went 3 years ago, this could be a pretty fun one to watch. Remember, go and check out eTORO. It's a very cool investing app. Link in the description and the pinned comment, and I'll see you guys later.